how to start with the business.
If you don't build your dreams, someone will hire you to build theirs.
Indra Nooyi hasn't invested a capital. She might be earning, she might be having a little amount of stake on the company, but she hasn't invested certain amount of capital contribution towards the company and started the company. She's running the company.
Taking the first step, we can
True.
guide them to take that.
That's the tagline, empowering the business minds. Basically, the 60%.
Employment in comparison to business, I feel that business has got certain advantages over employment.
It is the beginning of the company, because choosing the structure is the commencement of business.
It's a concept called limited liability partnership, wherein which the partner's liability is actually limited. But that's not the case in India.
Yeah, so the idea is set, the business idea is set, the structure is set. Now what happens is the next question. That is, show me the money. Where's the money coming from?
If we don't use credit cards or something, our credit score will be good. But it's always better to use credit cards and manage it properly at fixed timelines. Your credit score and CIBIL score will be good.
So there is something called as debt leverage.
Common thing is, it is not that bad to go for debt.
I've also heard this thing called good businessmen make money by using other people's money.
Yeah.
So leveraging the debt is very important.
That's very important.
Hi, hello, and welcome to FinChats by Team Finbook Global. We are back with an exciting series to empower, to bring more value to the business community, and this series is named as Empowering Business Minds. So, to start with the topic, I would start from the very basic term business. We have seen different businessmen in and around us. We have interacted with different people in the business community. So, how should we actually term or define the word business?
So I think business is actually an answer to a question or a solution to a problem that is existing in the society, which the person who brings in the idea tries to solve and make the society a bit better than it was before.
But I guess solving the problems alone cannot be termed as a business.
Yeah.
There should always be something in return as a consideration. So that's when I guess it's a business.
Yeah, the solution to the problem is actually a business idea. And
True.
executing the business idea for a consideration or something in return would constitute a business.
Yeah, that's make a great sense. Basically business is about executing the business idea for a compensation, something in return for the business owner. That definitely makes a sense. And while talking about business, we should also give them a glimpse about the term employment, which the most of the people across the globe depends more on employment, right? All of the people are not that fortunate to come up with a new business, though they have that desires. So when we talk about employment in comparison to business, I feel that business has got certain advantages over employment. Let's say business has got that limitless growth capabilities, capacities, and limitless income earning potentials. And again, the content or satisfaction that can be actually gained through fulfilling the real business objective. Those are totally different when compared to employment. And
So, Alan, I would like to disagree a little bit, because we cannot always say that only business persons have unlimited growth potential, because there are very successful people who are in employment, who are leading the companies, global companies. Like, for instance, Indra Nooyi. So she was the CEO of PepsiCo, and she has done an amazing job leading the people globally. And also, I guess many of the Indians are leading global companies now. Satya Nadella,
Correct.
then
Sundar Pichai.
So there are many unlimited potentiality when it comes to employment also. It depends all about the business acumen a person is having, irrespective of whether it's an employment or business. So it's not always necessary that a business person should build their business from the scratch.
Yes, Helen. So when we talk about that difference between a business and going for employment, it's basically the factor of risk, the risk appetite a person has. So it's a common notion that a person who's going for employment is risk averse. He is not willing to take that risk, and if you're going for business, it's too risky. That's something that everybody is telling. I mean, everybody who goes for a business or even starts a new business is being told.
Yeah.
So I don't think that is a problem here, because if you see that in employment, you can see that in the big corporates, people who are working for big corporates, you can see in the past trends that they have been laying off people, laying off employees, their employees in a huge manner. So, and that impacts their employment and that job security. So the question arises, if there is job security, or if are you replaceable? The question arises, are you replaceable in an employment? Right, so
Yeah.
that question is already there, and I don't think that risk will matter if there is a business or an employer. Yes, it matters, but I don't think that employment will have that same amount of risk that is related with that business. So, and I think I recently read a quote by Dhirubhai Ambani, and the Reliance founder, and it said like, it says like this. It goes like this, and I would like to quote him. It says like, if you don't build your dreams, someone will hire you to build theirs. I think that is the ultimate, like the bottom line difference between business and going for employment.
Yeah.
Building your dreams is your business, and if you're hired, if you're building someone else's dreams,
Or
that's an
working for
employment.
someone else's dreams, that
Yes.
that means
But I mean,
employment.
I actually agree with Alan. Basically, a businessman is obviously someone who starts his business with his capital contribution, with his sweat, everything. But that is obviously the inception of a business. But in the succession, I mean, obviously, if you take the example of Ambani, I mean, Reliance, and also PepsiCo, Indra Nooyi hasn't invested a capital. She might be earning, I mean, she might be having a little amount of stake on the company, but she hasn't invested certain amount of capital contribution towards the company and started the company. She's running the company. So basically, someone who's an employee or a head of an operations who's running the company with the business acumen. The business acumen is actually a differentiating factor. With the person with the different business acumen, running a business can also be termed as a businessman. For example, if I'm investing certain amount of capital, or I'm buying certain amount of stake or shares in a certain company, listed company, I'm taking the risk. I might be having the reward from the company as dividend, so I'm getting the profit share. But certainly, I'm not a businessman because I don't have any business acumen. I'm not running the business. So basically, a person who's running the company like Indra Nooyi, Satya Nadella, they may not have started the company, but they are running the company very smoothly. That means that so and so person can also be termed as a businesswoman or a businessman.
Yeah,
Yeah,
it makes
so
sense.
I would like to add on a add on to the question that Matthew has raised, whether the business person are irreplaceable. We cannot always say that a business person is irreplaceable, because when we look at the Ambani family, so in Reliance industry, Ambani is holding the majority stake, 40%, or I'm not sure about the percentage, but majority stake. But there is always a possibility that another stakeholder might hold a majority stake in a later stage. They are always part of the board, and they are answerable to the company, and there are many other stakeholders also. So irrespective of whether it's an employment or a business, there is always a threat of replaceability.
Yeah.
Yeah, got that. And now I can actually read along with the opinions by Alan and Ruben. The thing is, I should have actually termed the concept as entrepreneurship, I guess. I mean, it is the apt term which comes in place, because the term entrepreneurship, or the concept of entrepreneur, brings in the elements of initiative to pull up or to pick up a business, to start with the business, the courage that he should possess to start a business. And again, it's an environment within which all the elements that we have discussed, let it be business acumen, employees, that thought process, everything gets combined in an entrepreneurship. So basically, this can be termed as entrepreneurship, to be in
Yeah, I
fact.
personally agree with that statement. I mean, globally, on a statistic perspective, about 60% of the people among the population has a desire or has an idea to start a business. But around that 60%, only 14.7% of the people only start with the business.
That's
The
very
succession rate is a different matter.
Yeah.
But only this 14.7% has the courage or initiative to start the business.
So I guess we can call ourselves entrepreneurs, because being chartered accountants, what society expects normally is to be in an employment or to be in practice. So we have done that initiative to start something different, to serve the society better, to come up with a different idea. So that can be called as an entrepreneurship, right, Alan?
As a bottom line, I think we can say that all entrepreneurs are businessmen, but all businessmen may not be entrepreneurs, right?
Yeah. And again, there's a common notion that all of us have, I mean, every human being have that very tendency to stay within the most comfortable zones, that we used to say that, right? To stay in the comfort zone. But a businessman or an entrepreneur really stays apart when he actually comes out of the comfort zone. That's what actually make him different. And again, what Ruben had said about the 60 and 14% figures, our discussion has now really got a significance when we are here to actually motivate those 60% to come up with their real business dreams, I guess.
That's the
It's all
tagline.
about
Yeah.
taking the first step.
First
We
step.
can
True.
guide them to take that
I mean,
first step.
that's the tagline, empowering the business minds. Basically,
Yeah.
the 60%.
Yeah. So taking forward the discussion, while moving to the core areas of the discussion, what I would like to share is one of the most common questions, common question faced by us, being chartered accountants, was how to start with the business, the organization structure to be chosen by the business owner. To tell that, there are actually multiple options available to the business owner to choose between. If it is a single owner business, they can definitely go for a sole proprietorship. And if there are more than one, like let's say 2 or more, there are again multiple options like a partnership, a limited liability company, or a limited liability partnership, and again a company. Again, that company can be a private limited company or public limited company. So the thing is, the most common thing that come across these different structures are the concept of liability. Let it be sole proprietorship and partnership on one side, and a limited liability corporation or limited liability partnership and company on the other side. How it differs is about the liability. In case of a company or a limited liability partnership or a limited liability company, as far as the business owner is concerned, his liability is limited to the extent of amount or contribution that he has actually made. Nothing beyond that. But when it comes to a sole proprietorship or let's say a general partnership, the partner, the proprietor, the owner is actually liable for all the deeds of the business. It cannot be just restricted to the amount. It cannot be quantified. The liability cannot be quantified to the extent of contribution. That's one of the most common questions faced by us, and these are the solution to that.
So if you're saying that if something happens to a partnership, then that partner should bring money from his house, right?
Definitely, no doubt
But
in
that's
that.
not always the case. If it's a
Yeah, in
limited
case of a
liability
limited liability partnership or a limited liability corporation, there is a difference. But in India, we have seen that the normal partnership is there where the partners are jointly and severally liable. But that is not the case when it comes to US or UK. There is a concept called limited liability partnership, wherein which the partner's liability is actually limited. But that's not the case in India.
in
In
India
different
also,
geography, I think they have different type of
Different,
forms,
True.
right?
In
True.
US, it's LLC,
LLC,
and
yes.
there is S corp, C
C
corp.
corp,
Correct,
yeah.
correct.
And the factors are not limited to this. I mean, you have already explained
True.
about the composition, the liability part. The factors are endless. I mean, it can be taxation matters, regulatory compliance, expansion,
Yeah.
public perception. So, for a company, there is always a notion that public perception. If it's a company, it feels trustable. But that's all public perception.
Yeah.
Differs according to countries, people. So this decision of taking the organization structure is a very important decision because it has future impact on the
Yeah.
running and the succession of the business. So while taking the decision, it's always advisable to take a financial advice.
Yeah.
So when we started the company, we also had to consider various factors that were suitable to our company. Being a global company, we had to consider starting as a company or whether LLP is the better structure. We being chartered accountants, we knew all these factors and we had a better idea of these things. But when it comes to normal business person, he has to consider whether that factors are suitable to his business. For example, if it's a manufacturing company, it might be a necessity that it should be a company, or in a specific segment. If it's a startup, it cannot be a proprietorship. It should be a LLP or a company. So there are various factors that they have to consider, and they should, as you pointed out earlier, they should get a professional advice while it is the beginning of the company, because choosing the structure is the commencement of business.
Yeah.
That should be proper.
And just adding one thing to the statement made by Alan, the thing is that for a startup, it can be a company or a LLP, but the thing is that we are not actually encouraging all the startups to come up with a private limited company or a LLP for a definite reason. Like they can actually come up with a proprietorship, but the thing is that in an Indian context, the funding requirements or the startup registration things all works
And
out
to
in case of
to
for-
register with the startup mission.
yeah,
yeah.
to register with the startup mission. There is a requirement for coming up with a company thing.
That's where the
Yeah.
regulatory compliance comes
Yeah,
in.
and there the regulatory compliance comes up with. Yeah.
At the end of the day, what works for us won't work for the other
Workforce.
person.
You can't
so
follow someone's decision just like that.
yeah, so you have to change. It's better to take a financial advice, every
yes.
time.
True. Yeah. So once the structure is set, then the next question will be how to bring in money to the business to start with the operations, to meet the requirements of the business. There comes the great concept of capital, and it has got a great significance, especially across different forms of businesses, right?
Yeah, so the idea is set, the business idea is set, the structure is set. Now what happens is the next question. That is, show me the money. Where's the money coming from? So you need to start a product, or you need to work on the product that you have to give it to the society, and you have to work on the service that you have to provide for the society. You need money for that. Money is a basic, that is a basic requirement, right? So to bring in money, there are mainly two ways. One is the equity financing, and the other is the debt financing. Equity financing is nothing but your own resources, putting in your own money into the system, or the amount that you get from the company that you have built. And when you're doing the trial run, or when you're putting in the product, then you're getting some money, right? Then pulling that money back into the system of into your business is equity financing. And if you're looking what debt financing is, it's nothing but borrowing funds from banks or financial institutions, or from friends or families, because when
external
you're starting.
funding.
Correct.
Debentures.
Debentures, yeah.
Debentures is a technical
Yeah.
term that we can go through the next series.
Next
episode.
series,
And again, adding a thought of line to the equity thing Matthew has shared, like he was telling about, bringing back the money that are earned from the company itself. It is nothing but reinvestment. It is also a part of the equity finance. The audience might think about it's all about bringing in fresh money. It's at the initial phase, but once the business starts pitching in, they need a constant fund flow. Then they can think about reinvestments of the funds, which is nothing but the owner bringing in the funds from the business that they had made.
Exactly.
Yeah.
It's its own
So one
funds.
of the
Yeah.
some of the factors that we look forward, like when we are doing, should we go for equity funding? Should we go for debt funding? So some of the factors that we look at is the loss of control. It's a loss of control that if you're going for equity financing, there is a potential loss of control happening there, right? Because we are giving off some of our shares to the persons who are investing in us, and like that there is a loss of
Yeah,
control.
that is only when an external equity partner comes in. Something to add on, the loss of control only actually happens only when another equity partner comes in.
Yeah.
The existing shareholders' share is diluted. Otherwise, if the existing shareholders are investing, like you said, there is no dilution or loss
Got
of
that,
control.
yeah.
Yeah. So when we are going for that financing activity or financing decisions, whether we should go for debt or equity, the control aspect plays a role there,
Yeah.
and also the ability to service. If you're going for debt, there is always an interest charge. Since we are not taking any loss of control there, we are having that interest expense that we have to service, right?
So that is very true, Matthew. So there should be right proportion of equity and debt for the company. We cannot always say that having debt is a bad thing for the company because they have a liability to pay interest. This can have a positive impact for the company also. There is something called as debt leverage, where we can use this interest payment to deduct the overall taxation. We can claim it as an expense. So the overall taxation can be reduced. So we have to consider various factors like dilution of control. Also, we have to consider how we can utilize this debt leverage. There was an instance when one of our client was proudly saying that he didn't have debt at all. So that's not something which might be beneficial. It might be beneficial, but it is not always beneficial because there is a possibility of reducing tax also. So the right proportion is the key area where the consultants could actually help them with.
Yeah.
The most common measure of debt equity is actually 2:1, right?
Yeah.
It actually differs according to industries and companies, but the most common general phenomena is 2:1.
It is best to keep it below 2. That is like 1 unit of equity, 2 units of debt.
Yeah,
Yes.
Right?
Yeah.
If it's more than that, like
It is not a good sign.
not a good sign.
And to brief, the common thing is it is not that bad to go for debt.
Yeah,
Especially when it comes to
if
business.
you're able to manage your debts properly, it's the best thing to have.
Correct. Yeah.
Only when you manage the debt properly, your credit score increases. You
Yeah.
can have more debt at
Yeah.
lesser interest rates.
Yeah, that we have seen that in that particular thing across the CIBIL rating process,
Yes,
right?
yes.
Like the banks, they won't actually rate us if you don't have any debt.
I mean,
They're
companies buy each other using debt
Yeah,
leverage
yeah.
decisions.
Even for personal also, if we are purchasing through credit cards, there are points. It will add
That's
to
it,
our
that's it,
CIBIL
that's it,
points.
that's
So
it, that's it.
True.
we should always encourage using credit
I mean,
cards.
we
also.
believe that if we don't use credit cards or something, our credit score will be good. But it's always better to use credit cards and manage it properly at fixed timelines. Your credit score and CIBIL
Yeah.
score will be good.
Yeah.
I've also heard this thing called good businessmen make money by using other people's money.
Yeah.
So leveraging the debt is very important.
That's
Yeah.
very important.
Yeah. So we were discussing about the starting things that a businessman should be aware about. We mentioned about the organization structure, and before that we discussed about the very basic concept of business. Then we termed the structure part, and then we discussed about how to bring in money. But people might be, having that doubt. It's fine that we have that money, but how to start with the operations? Like, yeah, that's again going to be the next challenging question. But we are coming up with a solution and answer to that question in our coming episode. Till that, stay tuned.